You look at earnings, just in the past week, earnings have been revised up for 2024 from 246 to 247. So the economy's holding in there. We obviously know the Atlanta GDP now is pointing to positive things for Q3. So it's kind of this perfect balance. Operating margins are up 1% from last year. No one expect that, from 10.9% to 11.9%. So I think if we have a little softness in the labor market, which we're seeing, the quit rates are starting to decline, the job openings, as we saw with the JOLTS yesterday, are starting to soften. That creates an environment where you're not going to have the wage price spiral, where you're not going to see this accelerating wage inflation. And that's going to give a lot of comfort to the Fed. That's going to keep their pedal off the metal, let them keep rates elevated like we saw in the late 90s, and have this kind of perfect situation where the economy is slowing a little bit, but the Fed is done tightening, and then companies can start to perform. And I think there'll be a lot of rotation under the surface. So for those expecting the Magnificent Seven to have a monster second half like they had the first half, I think they're going to be a little surprised.